Welcome back. Let's talk to Alessio Rastani. He's the founder and CEO of leadingtrader.com, and my notes say that they are a leading trader education site. Alessio, very good morning to you. Right, market crash is my favourite subject. You've sent 2 slides. How to predict the next stock market crash.
Yeah, absolutely.
I've never found anybody who can predict tops and bottoms.
Absolutely. Yeah, and I don't claim to be someone who can do that either. I mean, I would hope that I'm smart enough to be able to predict the next major market top or bottom, and certainly I'll do my best. But I do want to share with your viewers some important tools that you can use to identify potential market bottoms and crashes. One of them is something that maybe people haven't really paid attention to. It's called the advanced decline line.
Yep, very good.
So if you take a look at these 3 charts, I've got the 2007-2008 crash up there at the top left, the 2000.com crash on the right, top right, and where we are right now between 2013 and 2017. The blue line on the chart is the advanced decline line, which is a market breadth indicator showing the health of the market, and that's the black line is the S&P. Think of the advanced decline line, I would say, as a sort of the way how a doctor would measure your temperature. It's sort of a measurement of how strong or healthy this market is. I don't want to go into the whole details of the technicals of what the advanced decline is, but just remember that it's a very good leading indicator. And if we just go back to that chart, we can see that what preceded, what came before every single market crash, 2007, 2008, the 2000.com, and I wonder, Nick, if you can spot it yourself, because I think you can see what's happening on the blue line, which is that we can see there's a divergence between what the market's doing, what the stock market's doing,
and advanced decline line.
Advanced decline line was going lower, was making new lows, or new highs, I should say that, whereas, in fact, the market was going higher. So is there any sign right now that there is some kind of trouble or crash in the market? No.
Zero.
Yeah, there isn't one. But we will see divergences when the time comes eventually.
So this is a leading indicator.
Yeah.
Okay, you should be watching this daily, right? If you're nervous
I would
about
say
markets.
daily, or I would say weekly or every month, because probably it's going to take some time before that divergence is formed. Now, there is something I want to talk about next, which is this. This is something that's often ignored, the relationship between junk bonds and the stock market. Because we've actually seen, and this has been noted by a lot of research has shown that when junk bonds start falling, especially when they fall below their 21 average, the blue line I've drawn there at the top, they usually precede significant stock market drops.
Okay.
This has happened. I mean, if we had time, I would show you some previous examples. We don't have time right now, but here,
The important thing is this is a leading indicator,
it is indeed,
right?
yes.
So this is predicting a potential sell-off in the S&P 500.
That's right, it is. Whenever we've seen the junk bond market, and the symbol for that is HYG, so essentially corporate high-yield bonds, or we just call them junk bonds. Usually they start dropping, or they start falling significantly below the 21 average about a few weeks, sometimes a few months, but usually a few weeks before the stock market itself starts dropping. If we go back to that chart, and again, I showed our members examples of this back in 2015, 2016 that predicted those drops back then. So we can see the significant sell-off there on the junk bond market. And we've just made a pullback to the 21 just recently. But you can see the arrow, the blue arrow is showing where just a few weeks ago, about a couple of weeks ago, we fell below that average on the junk bond market. That also, just for folks who may not know this, that also is telling us that there's a aversion to risk. People are leaving risk or stocks and going into more safety. So what does that mean? Well, if you just go back to that chart, guys, the stock market, we have to pay attention to the lows of last week after the fear came out about North Korea, all that kind of stuff, all the overblown fears that we talked about. So if we fall below the lows of last week on the stock market, I'll be worried, because that essentially would confirm what the junk bond market is.
Well, you'd have a lower high and a lower low there for a start,
Absolutely.
which is classic Dow theory, and your junk bonds, in theory, would be selling off, right?
Right, absolutely. Now, the question might be, why would the market sell off? What possible reason?
Invariably, at market tops, you don't know the reasons till after the event.
That's true. But there are a number of things that are happening right now which people might want to focus on. Not just the North Korean threat, which I think is a little died down now, but what's happening in politics in Washington, D.C. Here's what's going on. The popularity of, here's the thing, I just want to make sure I make a disclaimer here. I'm not political in any way. I'm not a Republican, Democrat. But the fact is that Trump's popularity has fallen to 30%. Politicians in Washington, especially Republican politicians, know they've got elections next year, midterm elections. The one thing that politicians never want to lose is their jobs, because that means they lose jobs, power, money, all that kind of stuff. So here's the thing. The recent comments by President Trump has got a lot of attention, and there's going to be, I predict that there's going to be a lot of politicians in DC who are going to be distancing themselves from Trump. And what does that mean for the presidency of Donald Trump? Because if that's in jeopardy, that could completely untangle the market's rally, because it depends on Trump delivering on key promises on infrastructure and cutting tax. So something to watch. Again, I'm not political, but something to keep an eye on what the market's responding to that.
Alessio, as always, we've run out of time.
Thanks.
Lots to talk about. Need to get you out of the studio for the next guest who's ready and waiting.
Sounds good. Thanks for having me. Thank you very much.
Thank you.